And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom. I want to thank you for joining us today. A few months back, I attended our Lifestyles Unlimited Expo, and if you don't know what our Lifestyles Unlimited Real Estate Expo is, it's the largest real estate gathering of its kind in the United States. Literally over 6,000 investors will all come together. We get together, we network, we have breakout classes, we have opportunities to tour apartment communities that our lead investors have put together and the passive investors have invested in. They get to see those apartment communities, walk them, learn how that lead investor took a poor performing business and is working to make it a great performing business, understand how it cash flows and what makes it cash flow and what makes it work. In fact, in 2023, we'll be having our expo in Irving, Texas. So you may want to make plans now. That'll be February of 2023. There are several different reasons why one would attend the Lifestyles Unlimited Real Estate Expo. One, you may be new to real estate investing or you're considering real estate investing. So you would attend our expo, take some of our breakout classes, meet other people just like yourself, ask a lot of questions, learn a little more. Another reason, and one of the primary reasons why I attended Expo, was to meet lead investors. And lead investors are people who would go out and purchase these apartment communities. They're known as syndicators outside of Lifestyles Unlimited, and they would gather passive investors to go in the deal. But I want to meet lead investors, one, to see if I'm a fit in their strategy. I want to learn more about who they are. I want to learn more about what part of the country they invest in. I want to learn what their goals are. And then they, in turn, get to learn a little bit about me. We need to be a good fit for each other, for instance, just to see if this is a relationship that we want to continue forward. And then if so, then someone like myself would indeed invest in properties with this lead investor. So I'm there. And I'm walking with a friend of mine. His name's Jared. He's been on the show before. He's also an active passive investor in apartment communities like myself. I'm introducing Jared to leads I know. Jared's doing the same on his end and introducing him to leads that he knows. My friends, basically networking 101. And we get to a part of the room and Jared says, "Have you invested in Arizona?" And I say, "I haven't. I really want to. I like the market. I like the metrics. I like what I see. I like what I hear from other investors that have invested in Arizona. I just haven't had the opportunity to do so." And Jared says, "Well, let me introduce you to my friend Vaibhav." And I have on today's show lead investor from Arizona, Vaibhav. Vaibhav, I want to thank you for coming on the show today.
Hey, good morning, Mike. Great to be here.
Yeah, I appreciate you taking the time. I know you're a busy guy, and we'll get into just how busy you are here in a little bit, but why don't you provide us a little bit of background about yourself?
So I'm basically from India. I came here in United States in 2006. I was working in an IT job, and I had my own firm from 2012. So I was into IT management and consulting business. I also completed an MBA after coming to USA and worked in IT for 14 years. Married to Komal, my wife, and two kids, Ayan and Anya. And then, I started working. I used to be a stock trader, day trader. I used to do the day trading also, and I went into deep with futures and currencies and commodities, auctions, everything.
Yeah.
And that didn't go well, very well. So I started finding a right, energy. Where can I spend more energy? And that's where I started investing in single family homes.
Well, I know a little bit about that side. I've played in that area myself, and heck, you're a busy guy. So you have your own firm. You found time to get an MBA. At the same time, you're married with children and doing all this and trading. You're a busy man, and then you found something else, literally real estate, to keep you busy. And you've done, looking at your portfolio, you've done really, really well there in Arizona. Just to clarify, you've purchased 10 multifamily properties and you've sold 3. Is that correct, Vaibhav?
That is correct. So, one was the portfolio.
Okay. That's in such a short amount of time. By joining in 2016, it's pretty incredible what somebody can do in 7 short years when they put their mind to it. And we have just a little bit of time left, but why don't you tell us what's happening in Arizona? What are the dynamics of the Arizona real estate market?
Arizona has been great from many years, as we know. Number one, it was the number one part of the country for rent growth. Number of years, 3-4 years in succession. And the main reason was, I think the jobs were getting created. Net migration was big here.
Yeah.
There were a lot of people moving inside, coming to Arizona. When I saw the news and reports, it was 100, 150 every day. That migration and that new migration, and then it became 200. And last time I read, it was 300 people moving in every day.
I'm Mike Harrison. If you miss any parts of the show, you can always pick us up on your favorite podcast app. There on your smartphone, just subscribe to the Lifestyles Unlimited Real Estate Investor Radio Show. That's the way I do it, and the show automatically uploads when a new show comes out. And that way, if you're driving somewhere, working in the yard, taking a walk, what have you, you can just tooth it up and stay current and listen to the shows there. YouTube, we have our own YouTube channel. Ton of content. You can absolutely get lost in it. Everything from case studies, the radio shows, of course. You'll see people walking single-family properties and pointing out what they're going to do to rehab it, how they're going to make it a great property. And then, as always, our website, lifestylesunlimited.com. I have on my show today a guest, lead investor from the Arizona market, Vaibhav. And Vaibhav has been a very busy man. He came to the United States in, Vaibhav, what'd you say? Was it about 2012? Is that correct?
2006.
2006. Okay, I left 6 years off, started your own IT firm, found time in between to get married, have children, get your MBA. So you're obviously a guy that doesn't sit around and waste time. Then you began looking for something different. Obviously, you realized that stock market investing may not be the friendliest way to build wealth over time. You found Lifestyles Unlimited, and then since then, you've purchased 11 different apartment communities, some of those very, very large. We'll get into that later in the show, and you've done that all in a very short amount of time, including two very significant accomplishments that I want to get into. The first one, Vaibhav, and I think you probably know where I'm going, because you've done something that at the very least most of us on the outside would think is impossible or just extremely difficult, and that's because you were able to purchase that first apartment community in California. And nothing against California, just to say that real estate is very, very expensive, and it doesn't always work with our model. But you purchased a 28-unit in California for, if I'm reading this, it was $1.825 million. And just doing the math, that's only $65,000 a door. That's a bargain in Dallas, Texas. How'd you find that property?
Well, Mike, that was in 2017. Let's remember those times, right?
Right.
And then I was... we used to be in Bay Area. We used to live in California.
Yeah.
And my single family market where I used to buy single family is there was no cash flow. There is no cash flow in buying anything in Bay Area.
Yeah.
So I wanted to go after cash flow, and so I found this market, Sacramento, which was 1.5 hours driving from my home.
Yeah.
And so I knew that market, and that's where once I joined Lifestyles, I got I got the education, I got the training, and help from the mentors, and that helped me pull the trigger on this 28 units in Sacramento. I think everyone except me were skeptical that if this deal will work.
Yeah.
But I think at that time, where the houses were, where the apartments per unit was like $90,000, $100,000 a door,
yeah,
I was able to find this off-market deal.
Yeah.
And that's how I was able to get this $65,000 per unit community.
It was pretty rough, you said?
Yes.
Yes, absolutely. I would imagine such at $65 a door, but even back then, that just sounds low to me. But I'm no expert on the California market. I'll be the first to say that. So what did you identify? Obviously, it needed a lot of CapEx to improve the property, but what did you identify as the opportunities on this property?
So what I was looking for, a self-managed owner who was just doing this as a hobby rather than as a business.
Right.
And then it was a lawyer who was owning it, and he had one person who was managing, who was fixing tubs and tiles and paint and everything, and it needed very high deferred maintenance, and then I think the rents were too low. So that was I thought that this is the one. If we fix it up well, if we run it professionally, we will make some money on this.
Yeah, you turned that property nicely. Obviously, you had to go in and do quite a bit of CapEx on it to improve the property and make it a better, more functional place to live. But what a great first property to cut your teeth on. What did you have any fears prior to going into this? I mean, real estate is completely different. You've got an electrical engineering background. You've got an MBA. You've been a business owner, and then here's this real estate, which is just completely left field from some of the background that you have. What were your fears prior to purchasing this?
There were fears, and I would say it was more, if I can do this, but with lifestyles and the support and education and the mentors that we have, I think that made it the transition much more easier. I went into this property as a hybrid property, but it turned out to be a value deal with a lot of work that I was not expecting to do on my first property, and ended up learning a lot and doing a lot of work. So all the way, I think I had a community who was much more knowledgeable than me, who was ready to help, and mentors who were ready, operational consultants. And I think all of those, I was able to take help. So I used to run big teams in IT, and I just knew that the power of team is just much, much better than just going alone, right? So I was just able to use all the resources that Lifestyle provided to use into this property and to learn from it.
What a great first property, because of the fact that you did learn a lot, and that's what we want our leads to do. We want our leads to be involved in that first property, everything from management to the CapEx to running the business to the books to the accounting. Essentially, when you have passives in a deal, that's you're syndicating partnership, and so you've got to learn that side of the business. So what a great first property for you to develop and hone those skills, because you've obviously taken it to the next level by going to Arizona and then just looking at the portfolio that's grown incredibly. And I want to get into that side of it. We're up against a break, but I want to talk about that when we come back. One of your properties, so this was a 28 unit, one of those was a 440 unit property. What a huge difference between those two, and I want to talk about that.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
The rich get richer and the poor get poorer, not because that's the way it's set up, but because of the knowledge.
When put into action, knowledge is power. At Lifestyles Unlimited, we empower you to live the lifestyle of your dreams through passive real estate income. For over 30 years, our successful members share their knowledge through case studies, classes, and mentoring. Tap into the knowledge. Attend a free workshop online. Register now at lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show, where, as always, we're working on your financial freedom. I'm Mike Harrison. If you have any questions about Lifestyles Unlimited, about how to get started, about real estate investing, about anything at all, please send me an email. I do respond personally. My email address is askmike@luinc.com, askmike@luinc.com. If you'd like to learn more about Lifestyles Unlimited and what we do, purchasing properties that cash flow, single-family properties and multifamily properties, how we make money 5 ways on a single-family property, I suggest you attend our Lifestyles Unlimited workshop. That's at lifestylesunlimitedworkshop.com. You can tune in, no obligation at all. All you need literally is an internet connection. I suggest you do it with your partner, your best friend, or anyone that may have an interest in your real estate investment path, and you can ask questions there. So I have real estate lead investor from Arizona, Vaibhav, on the show today. And Vaibhav started in 2016. He was looking for a better way to grow his wealth and create passive income. And Vaibhav did something that many of us thought was next to impossible, and he found a great property in California. He improved that property. He made it a better place to live, functional place to live. He improved the business aspects of the property. And then, Vaibhav, how long was it until you sold that property?
Just a little over 1 year, so 13 months, I believe.
Okay, so a quick hold. And then how many passive investors were in the deal with you?
10.
10, okay. And for you listeners out there, this was an $8.25 million purchase. So Vaibhav got together. He found 10 people that liked his business plan, liked what he was going to do with this property, and they said, Vaibhav, I'd be happy to invest with you. They handed him money. They purchased this property. Vaibhav, as the lead investor, improved the management, improved the property. They sold it, and they all made a nice return. Now, Vaibhav, around this time, you made the transition to the Arizona market. How was that during the ownership of this, or was it soon after you sold this property? Give us an idea of the timeline there.
During when I used to own this, I just wanted to find a better and a bigger market to scale my business and to scale the properties. Sacramento is a small market.
Yeah.
So I was trying to find, I had narrowed down many markets, including Phoenix and Tucson. So I finally decided that and started coming to Phoenix and Arizona from 2017. So I used to travel at that time.
So you had an idea of the dynamics of Arizona, and that's about the time Arizona really, well, maybe a little bit before then, but when the market really started taking off with all the people moving to Arizona, the jobs, the economy, everything's starting to boom. So you got in there at a really, really nice time. Now, I had teased earlier 2 accomplishments that you had, 2 wonderful accomplishments, not to mention your engineering background and your MBA and owning your own business and getting married and having kids. But on top of that, you purchased the property in California, successful purchase, and then you also retired. How old were you when you retired? And then put that in the timeline of your investing here in Arizona.
I was 34, maybe, at that time. So 34, 35, I think that's when I retired. But that was just 2 years after joining Lifestyles Unlimited. So, and lot many years ahead of the planned retirement.
Okay, so you were able to walk away from corporate America prior to making the big jump into the Arizona market, and 34 years old. How wonderful is that? And for you, those of you listening out there, when Vaibhav says he's retired, what he's saying is his passive income is coming in at such a level that it covers his monthly obligations. He doesn't need the W-2 job anymore. So he's able to walk away and concentrate on real estate. And boy, has he. Vaibhav, we talked about you've gone from a 28 unit to what I thought was a 440 unit, but it was actually two properties that you combined into one deal, 200 and a 240. But prior to that, I mean, you're not afraid of the large apartment community at all. And I'm just kind of looking here. You went 28 unit to 64 unit to 208 to 160 to 304. That's a big one. To 56 to 144 to 68 to 364 units there in Tucson. So what a jump. Tell me your thoughts on that property.
Well, yes. So that property, so we were looking for a long time. It's a great story on that property. So my third property, which was Casa del Coronado in Tucson, we bought in 2018, and then we sold it in 2021 for a nice 275% return net to investors. And then most of my investors wanted to stay and invest it somewhere. And that's where I tried to figure out if I can do 1031.
Yeah.
So we were looking for a good property from a long time while the property was under contract. And then we found Standard Raintree, the 364 unit. And so we did the 1031 on that. We sold Casa for 135 a unit and bought this one for 115 a unit. So, and it's a much higher class than what we sold. So it was a great fit.
Vaibhav, I gotta jump in there because I know you're an engineer, and to you it's all math, and your voice is very steady. But what you just said there is incredible. I'm telling you, I'd be surprised if you ever bought dinner again around your investors, because first of all, okay, you have this Casa del Coronado, and you returned your investors in 3 years 275% net return. That is absolutely incredible. Now, does that include the original investment, or is that
no?
That's not baked in. Okay, so to reiterate for the listener out there, if you were to invest with Vaibhav $100,000 in this community, after 3 years, he would say, "Thank you. Here's your $100,000, and oh, by the way, here's an additional $275,000. But wait, it gets better. Rather than pay the capital gains on that $275,000, why don't we do what's called a 1031 exchange? And we're going to take this money, and if we 1031 exchange, it's an IRS rule, you can then go like kind and purchase." So you took all that money and you put it into a new property. By the way, cash flowing all the way through. So now your investors didn't have to pay taxes, and they're in this large property. Vaibhav, that's incredible. That's a great project. How's that Standard doing? It looks like you just bought it in February 2022.
It is coming along very, very, very nicely. So I think the lease trade outs are almost 35 to 40%, which is what we were looking for. So I think it is growing well. It's doing well.
Yeah, I would say, and just the fact that you're able to put all those funds, the returns from the first property, into this property, it looks like your plan here is to refinance in 18 to 24 months. Has that changed at all with the recent ticks up in the interest rate with the Fed, or what are your thoughts there?
I don't think the plans have changed. Maybe the returns would be something that we were expecting.
I'm Mike Harrison. I have a guest on the show today, lead investor from Arizona, Vaibhav. He has purchased 11 different apartment communities. He joined Lifestyles Unlimited in 2016. Vaibhav, what a ride in 7 short years. Let me ask you this. When you first started taking a look at real estate and then purchasing real estate, here we are 7 years later. Are you where you thought you would be?
Never. I didn't think I would be here. Didn't plan to be here. Just wanted to start and replace my single property cash flow and just increase it to where I'm comfortable. But never thought I would be here after 7 years. It feels great.
That was a loaded question, if you couldn't tell. You've been incredibly successful. You're a young guy. What's next? Are you a passive investor at all? We never touched on that.
Yes, I am invested passively, totally. So I'm invested in totally 3,500 plus, almost 3,700 units, and out of that, it's like 50-50. So 1,800 plus units are my lead units, and the rest of them are passive units.
Okay, so I guess we can look at this as 2 legs of the real estate investment path. You've got your passive side. You've got your lead side. You've been very successful. Do you have plans going forward to continue to grow both sides of those or to focus on one over the other? What are your thoughts there?
Yeah, I think I plan to keep going the same way. I think it is working, definitely. So I'm not going to stop investing passively. On a lead side, I will keep going, just mainly for my investors, who always motivates and drives me to find new properties. So I think, and it's fun. So I left my IT career because I was not having fun, and I wanted more fun. So I think I'll keep doing this, but maybe passive route more often than the lead route.
Yeah, I like the plan a lot. And for you listeners, in case you missed it, I like what you said about your passive investors. And we really do develop a relationship with our leads. So we get to know them well. We see them at our networking events. We see them at the Expo. We end up becoming friends. I'm friends with a lot of leads out there, people that I didn't even know a few years ago. And you just develop that relationship side of the business. And when you find somebody that knows what they're doing, that understands the market, is successful in the market, by all means, you're kind of patting them on the back and saying, hey, how are things out there? Are you still looking? What are you finding? What's going on? And you've been very busy. That you purchased that big property in February of 2022, and then the 2-unit portfolio. When was that one purchased? That was also this year, correct?
That's correct. So the last one of that, we just closed it in June last month.
Okay, so you're not wasting any time continuing on. Let me ask you another question. What would you say your keys to success have been?
Well, I like to stick to basics. Before I buy any property or while I'm in the market, try to remember what my mentors taught me and try to always remember the basics, right? Really, I'm big on the market and the sub-market. I am in Phoenix. I started in Phoenix, but did not buy any property or a good property, bigger size and stuff after 2019. I just bought one last year, December, but that was just a different reason. But I like Tucson. So in 2017, when I was traveling, I didn't like Tucson. 2018, I thought it is coming to the trend. So I try to get in the market first, sub-market first, work on that, and once it is finalized, and that's why I was in Sacramento, where I was, and then try to buy right. I'm not looking for any We don't have fees and stuff in lifestyle, for acquisitions and stuff. So we don't. I'm not in a hurry to buy anything if we don't get it at the right price. So buy right. That's the mantra that I go with. Do conservative underwriting and buy right, and then continuous monitoring of the asset and financials, right? So that has kept me on the right side. And the last but not least is the debt. What kind of debt I'm placing on the properties.
Yeah, I like that you said don't be afraid to essentially say no or walk away from the deal if the metrics aren't making sense or if the math isn't making sense. And then the debt's changing. You're active right now in the market. You just purchased a really big portfolio there in June. So I guess you could see it from two sides. I can imagine you're well known in your market. So as far as the lenders and the banking side of it, you're probably getting as good a terms as anybody out there. But have you seen where the banks are bringing a little less to the table? I know they were at 80% not too long ago, but how has that changed for you?
Yeah, banks are bringing lower, and it's mainly, the asset prices have gone up. I remember the times when it was 80% and 2019 property, I bought 304 units, negotiated a good price and got 80% agency financing, 6 years IO, and it was great. So now I think it is coming to maybe 65 to 70%.
Yeah.
But I think in all sense now, I think it's better to go with a lower leverage in current market than just trying to squeeze any higher leverage possible.
I agree with you. And for those listening out there that may not realize what Vaibhav's saying is less leverage really is less risk. If the bank is only lending 60 or 65%, it means that you've got that much more equity in the property versus 80%. You would only have 20% equity in the property. And now you might have 40, 45% plus any sort of appreciation on an annual basis. So it's really, there's a couple of silver linings here, especially for a guy like you, Vaibhav. One, less risk, but two, I bet there's passives that are tripping over themselves to get onto your passive list and get to know you and hopefully invest with you in the future. So if the bank is bringing less to the table, it means you can accept more passives into your deal, obviously.
True. Very, very, very true. Yeah, that's what is happening.
Well, going forward, your children from the pictures are pretty young. Have you and your wife started talking about teaching them what you've learned in the real estate side and getting them involved as they get a little older in the business? Or, their ages, they just appear young, so I don't know how that conversation's going or what your thoughts are there, but maybe you can share that.
Yeah, we definitely plan on doing that. It's not started yet. I think they are still young.
Yeah.
But my elder one does know and started asking me, which apartment did you go today? What did you do? How does the rent work?
Yeah.
What does how do you pay bank? So he started asking questions, those kind. We like to have, them curious first and ask questions so that we know what's the right time and when they're ready. But I think in a couple of years, I think we'll start getting them involved side by side.
Yeah, they start asking a lot of questions. And then obviously as they get older, they say, well, yeah, this is something I would like to do. I would like to find a way to, on a single family property, add another $400 a month or $500 a month to my income. And then they get real serious when they're about 20. They're like, yeah, okay, how do we start this? And so I'm kind of at that side now. When they were young, my youngest, I can remember driving her to look at properties, single family properties that were really run down. And it was always interesting to see because as a young child, the house is abandoned, the windows are broken, there's a hole in the roof. They're kind of afraid of it, but then when they see it at the end and you walk them through, it's a neat feeling. So, good for you, Vaibhav. You've done great, excellent portfolio in a short amount of time. I can only imagine what the next 5 or 10 years would be. We've got a little bit of time. What would you say for somebody considering investing in real estate? Do you have any thoughts there?
Yeah, I would say just take education on what you can do, what are the opportunities and possibilities out there. When I joined, I never knew that we can invest in apartments, we can own apartments. I thought it was all big corporations. But just take some education. There are a lot of opportunities out there. And once you do take education, don't wait and just take action to either buy yourself as an IRO or invest. But I think the education is key to get some confidence.
Vaibhav, spot on, and I want to thank you for that. I think you're exactly right, and I thank you for sharing your time today. For those listening out there, I want you to remember, it's not the money, it's the lifestyle. I'm Mike Harrison. Make it a great day, and we'll see you next week.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented